Yes, students. Now we will go through the questions from ICI material. First one, multiple choice questions. In sugar manufacturing industries, molasses is also produced along with sugar. Molasses may be of smaller value as compared with the value of sugar and is known as what? Byproduct. Method of apportioning joint cost on the basis of output of each joint product at the point of split off is known as sale value method, physical unit method, and average cost method, marginal cost and contribution method. Physical unit method on the basis of output. In the net realizable value method, for apportioning the joint cost over the joint products, the basis of apportionment would be selling price per unit of each of the joint products, selling price multiplied by the units sold of each of the joint products, okay, sales value of each joint product less further processing cost of the individual product. Guys, actually the answer is C. Out of the given, it is C. Out of the given options, it should be C. But if by chance if there is no further processing cost, then what should we take, sir? Straight away sale value. Straight away sale value. That is only the second option, second priority. Clear? If you have given me B and C and asked me to choose any one, I will obviously choose C. But as per the suggested answers, they have given both. That is B as well as C, guys. But please be careful. B will come. B will come only if there is no further processing cost. If there is further processing cost, we should always reduce it, guys. Oh, sure. The main purpose of accounting of joint products and byproduct is to determine the opportunity cost? No. Determine the replacement cost? No. Determine the profit or loss on each product line? Yes, sir. I want to know the profit or loss made on each product line. For that, I need to know what is the cost I have incurred for each and every product. That is joint products. So that I can calculate individually what is the profit or loss made by the respective products. Fifth one, under the net realizable value method of proportioning the joint cost to joint products, selling and distribution cost is added to joint cost? No. Deducted from further processing cost? No. Deducted from sale value. Correct, correct. There are three items which we will reduce if at all it is given. Which are those three items? Sale value minus three items. Further processing cost, selling and distribution expenses, then estimated profit. Estimated profit. Which of the following is a co-product? Diesel and petrol in oil refinery, edible oil and oil cakes, curd and butter in a dairy, mustard oil and sunflower oil in an oil processing company, guys. This one. Okay, they both are co-products, guys. Different variety of oil. Okay, so next coming to the seventh one. Which of the following is an example of byproduct? By diesel and petrol, don't tell it is a byproduct because almost same value. I cannot tell exactly same, but almost. Almost, because guys, if it was a byproduct, there should be a huge difference between main product and byproduct. Okay. Edible oil and oil cakes, yes for us, but let us see the other options also. Curd and butter in a dairy, then mustard seeds and mustard oil. So it should be edible oil and oil cakes, guys. Sir, what is oil cake? Guys, this is something which is left over after extracting the oil. This is something which is left over after extracting the oil. Sir, what do we do with this? Maybe you can use it as a fertilizer or a fooder. Clear? So we call it as a byproduct. That is, oil cakes is a byproduct. Oh, next. Which of the following method can be used when the joint products are of unequal quantity and used for captive consumption? First of all, sir, what is captive consumption? When you are using the product within the company, you are not selling it. You are not selling it. That means sale value is not available. Yes, sir. So technical estimates using market value of similar goods can be used. Yes. Let us see the other one. Net realizable value method. To calculate net realizable value method, I want sale value. We are not selling it. Physical unit method, they told unequal quantity, so maybe not suitable. Then market value at split off point method, that means there also we need sale value, which is not available. Why? I am not selling it. Guys, captive consumption means what? I am using the joint product, maybe within the company as only as a raw material for some other process. For some other process. That means I am not selling it in the market. So out of the given, which one is the better? Better. You guys fix the cost. or the value based on what? Technical estimates. Which of the following statement is not correct? Guys, please be careful with this kind of sentences. Sometimes they can ask what is correct, sometimes they ask what is not correct. What is true or what is not true. Okay. Which of the following statement is not correct in relation to co-products? Co-products may also have joint products. Yes, it can have. So it can be right. Costing for co-products are done according to the process costing method. Yes, you can follow. Next, co-products do not have any byproduct. How can we conclude it? How can we conclude it? Can it have? Yes, it can have. So this is the odd thing out. Last one, let me read. Co-products are treated as a separate cost object for costing purpose. Yes, you can do it. Why, sir? I want to know what is the cost of co-product also. So can I calculate the cost of co-product separately? Yes, I can calculate it. Next. So answer is C, guys. 10th one. When a byproduct does not have any realizable value, the cost of byproduct would be transferred to costing profit and loss account? No. Byproduct cost is borne by good units? Yes. Byproduct cost is ignored. Byproduct cost is determined taking value of similar goods. Guys, it will be observed by good units. See here, good to bad is not there. Byproduct is bad product? No. So is it a loss? No. But we are treating it at par with the loss. Clear? As we don't have any sale value, it is almost like a loss. Correct? Yes. So if I had incurred any cost for it, it will be observed by what, sir? My main product. Here, good units is nothing but main product. If you want, mention it. Good units is nothing but main product. So whatever is the cost of byproduct will be observed by main product. Inchara, where is your study material? 11th one. SG Limited manufactures two products from a joint milling process. The two products developed are mine support MS and commercial building CB. A standard production runs incurs joint cost of 1 lakh and results in 60,000. Okay, joint cost is 1 lakh and results in 60,000 units of MS and 90,000 units of CB, joint product sales. Each MS sells for 200 per unit and each CB sells for 450 per unit. Assuming no further processing work is done after the split off point, the amount of joint cost allocated to commercial building on a physical quantity allocations. Look at the beauty. They have asked based on the physical unit method. But why did they give selling price and all? Maybe just to confuse you. Clear? Yes. Sir, for us only 1 lakh joint cost to 60,000 to 90,000 is enough, sir. I can aram calculate the answer. Okay. For whom? Commercial building. What is the CB's? So it is 90,000. So 1 lakh is the total joint cost, guys. Divided by total quantity 1.6 into point, sorry, 0.5. No, 1.5. This was correct. Okay. This is 1.5. So correct, na? 60 plus 90. 60 plus 90. So how much is that, guys? For CB, they are asking, na? Commercial. Okay, that means it should be 90,000, right? 90,000. Okay, 0.9. How much is that, guys? Huh? 60,000. 60,000. So out of 1 lakh, 60,000 has to be apportioned to commercial building, guys. Okay. So please be careful, sir. How did you get 1.5 lakh? 60,000 plus 90,000. Then how much is for commercial building? 90,000. We multiplied with it. Oh, 12th question. K company manufactures two air care lotions, Livy and Silly, out of a joint process. The joint common cost incurred are 6,30,000 for a standard production run that generates 1,80,000 gallons of Livy and 1,20,000 gallons of Silly, totally 3 lakh. Livy sells for 240 per gallon and Silly sells for 390 per gallon. If additional processing costs beyond the split off point are 140 rupees per gallon for Livy and 90 per gallon for Silly, the amount of joint cost of each production run allocated to Livy again on a physical quantity basis. For Livy, how much is that price? 180. 180. Okay, so let me calculate. 6 lakh 30. 6 lakh 30 is my total joint cost divided by total quantity 3 lakh into how much for Silly? Silly, sorry, Livy. 1,80,000. Hmm. Sorry? 3,78,000. 3,78,000. Please be careful. They have asked for Livy. See, if by chance if you calculate for silly, might be that also is there in the option. Don't get confused. Please be very careful with the names when they ask like this, guys, especially for MCQ. Calculate for silly. Try to, we'll see whether it is there in the option. Into means 6,30,000 divided by 3 lakh into 120 euro. 2 lakh 52 11, 32 11. Okay. But sometimes they may keep that also as an option, guys. Please be careful because when student commit mistake and if that is there in the option, you will feel confident. Yes, what I have done is correct. For the purpose of allocating joint cost to joint products, the sales price at point of sale reduced by cost to complete after split off, that is nothing but further processing cost, is assumed to be equal to what, guys? Joint cost? No. Sales price less than normal profit margin at a point of sale? No. Net sale value at the split off. That is what I explained you in net realizable value method. When we do reverse calculation, we will end up getting what? The value of the joint products at split off point, which is nothing but net realizable value, guys. Yes. Sure. Next, we will move to the practical problems. Guys, first question and second question, I have already covered it as a part of my question bank. We have already solved it in the class. We'll move to the third question. Third question. Buttery butter is engaged in the production of buttermilk, butter and ghee. It purchases processed cream and let it through the process of churning until it separates into buttermilk and butter. For the month of January, Buttery Butter purchased 50 kiloliter processed cream at 100 per 1000 ml. Conversion cost is 1 lakh, where incurred up to the split off point, where the two saleable products were produced, that is buttermilk and butter. Butter can be further processed into ghee. Okay, butter can be further processed into ghee, guys. So we get two joint products, butter and buttermilk. Butter can be further processed into ghee. Maybe some decision making also might be there. The January production and sales information is as follows. Buttermilk production in kiloliter or ton 28 and butter 20, ghee 16. Sales quantity in kiloliter or ton 28 and that is same. Butter we are not selling maybe because we are converting it into ghee, guys. So ghee sales quantity is 60. Selling price per liter or kg is 30 and 480 for ghee. All 20 ton of butter were further processed at an incremental cost of 1,20,000 to yield what? 16 kiloliter of ghee. There was no opening or closing inventories of buttermilk, butter or ghee in the month of January. Required. Show how joint cost would be apportioned between buttermilk and butter under estimated net realizable value method. Guys, please be careful. Now, when we are calculating net realizable value, we have to calculate for which two products? Buttermilk and butter. But for butter, we have to take the sale value of what? Ghee. That is after further processing. Hope you guys remember. Yes. Chlorino PVC. There was no opening or closing inventory. Okay, that is the second requirement. This is made. This is with respect to decision making. Healthy bones. Okay, this is someone outsider. Offers to purchase 20 tons of butter in February at 360 rupees per kg. In case buttery butter accept this offer, no ghee would be produced in February. Why, sir? Where is butter to produce? Correct. Butter we have already sold. Okay. Suggest whether buttery butter should accept the offer affecting its operating income or further process butter to make ghee. So should they sell butter or should they process it into ghee and sell it? So if they sell ghee, they will get this much. If they sell butter, it is 20 into, they are offering 360 per kg. So should they go for it or not is what they are asking. Okay. See, one important thing here is they have used different units in the question. Different units in the question. MLO, liter, and also kg, kilo, liter and all. Sir, what is that? First we have to break it up. We have to break it up. Where shall I write? Okay, let me write it here. Let me write it here. If you want, you can also make a note of it. Guys, 1 liter is equal to 1000 ml. 1000 ml. Then 1 kiloliter is equal to how much? 1000 liter. 1000 liter. All this will be helpful for our calculation. Okay, 1 liter is equal to 1000 ml. Same way, 1 kiloliter is equal to 1000 liter. 1000 liter. Clear? Yes. And here liter and kg is one and the same. Okay, 1 liter you can assume it to be 1 kg. 1 liter is assumed to be 1 kg because few places they have used kg also. Oh, fine. Let us move to the solution now. Yeah. First, neutralizable value of each of the products. First, buttermilk. Sir, what is the sale value? 30 into 28. 28, I guess what liters or kiloliter is there? Yeah, guys, please pay attention. Sir, what is the sales quantity? 28. 28 what? Kiloliter. 28 kiloliter. Selling price is what? Per liter. Hello, per liter. It is per liter. Now what should you do? Sir, 28 into 30 into 1000 into 1000. Hope you guys are understanding. Any confusion? Please be careful. By mistake, you may take only 28 into 30. Gone wrong. First step ಹೋಯ್ತು ಅಂದ್ರೆ full okay. Now ghee 16 kiloliter into what is the selling price per liter? 480. Okay, 480. Okay, first can I calculate per kiloliter how much? Yes, 480 into 1000 into 16. Into 16. Hope you understood. You make a note of whatever I have written here. 1 kiloliter is equal to how many liter? 1000 liter. Okay, so let us now go. Okay, sir. So you can observe here. Into 1000 is used in both the places. Okay. Next, further processing cost. Further processing cost is only given for butter, which is further processed into ghee, guys. Guys, please be careful. What selling price did we take here? Geese. I have told you, when the sale value after further processing is available, for calculating neutralizable value, we should always take the sale value after further processing. Sir, then why are you writing butter? You would have written ghee, no? No. Only sale value of ghee we are taking, but we are apportioning the joint cost to whom? Joint product, which is butter and buttermilk. Okay. We got net realizable value 8 lakh 40 and 75 lakh 60,000. Use this as a ratio. Use this as a ratio. Apportionment of joint cost of 51 lakh in the ratio of what? 1:9. Sir, how did you get to know 1:9? Guys, see, you need not simplify so much so that you will not waste too much time. You can simply remove 0. 4 zeros, 4 zeros. 4 zeros, 4 zeros. Even if you want to simplify in a shortest way, better way, what do you do is simply divide 8 lakh 40 by 75 lakh 60,000. Okay, or 75 60 by 8 lakh 40. Do it either way. You will know what is the ratio I can take. Is that clear? So 1:9. How did you get to know, sir? 75 lakh 60,000 divided by 8 lakh 40. If it is exact number, okay, then you can take that as a ratio. Sir, can I spend so much time in the exam? If you don't have, then better simply remove 0 and take cash. So it would be, if you remove 0, it would be 84 is to 756. 756. Okay. Sir, how did you get 51 lakhs, sir? 51 lakh. Now let me check that. Guys, all these are interesting. Looks simple. But getting number is the challenging thing here. Presentation, everything you will take care. Come to this point. For the month of January, let me read from you. For the month of January, Buttery Butter purchased 50 kiloliter processed cream at 100 per 1000 ml. 1000 ml and ratio 1 liter. Understanding? Yes, sir. So 100 rupees per liter. All confusion how they have created, you see. They would have used per liter only. So 100 rupees per liter. Let me call it as per liter. Conversion cost is 1 lakh incurred. Okay. So we need to add this also. Guys, come on. 50 kiloliter. Now if I convert it into liter, it would be how much? Into 1000. Into 1000. And what is the cost per liter? 100. Clear? So it will be like this: 50 into 1000 into 100 plus 1 lakh plus 1 lakh. So this is like first part. The second part they have told conversion cost 1 lakh. We have taken together. So now that 51 lakh, I am splitting it between buttermilk and butter in the ratio of net realizable value. Okay, so coming to the second part, incremental calculation. If I sell ghee, what is the sale revenue I will get? 16 kiloliter into 1000 into 480 rupees per liter. This is the sales revenue for ghee, guys. Now, sir, if I sell butter, what will I get? 360 into 20 into 1000. So, what is the difference, sir? 4 lakh 80. So, if you process ghee, butter into ghee and sell, you will get an additional revenue of how much? 4 lakh 80. For that, you have to incur an additional cost of how much? 1 lakh 20,000, which is further processing cost. So this will increase your income by how much? 3 lakh 60 lakhs. The operating income of buttery butter will be reduced by 3 lakh 60,000 in February if it sells butter. If it sells butter, what happens? Its profit will go down by 3 lakh 60. If you ask me other way, if I process butter into ghee, how much my profit will increase? 3 lakh 60 to healthy bones instead of further processing of butter into ghee for sale. Thus, buttery butter is advised not to accept the offer and further process the butter to make ghee itself. This is the advice we are giving. Okay, now just sure. Please be careful with that MLO, KLO, yellow. That's the important thing here. Hope you guys have made a note of it. This is important. 1 liter is equal to 1000 ml. 1 kiloliter is equal to 1000 liter. Question number 4. NL Manufacturing Company uses joint production process that produces 3 products at the split off point. Joint production cost during the September were 8,40,000. Okay. Product information for September was as follows. Units produced. Units sold. Units sold is more than units produced. Okay, maybe some opening stock might be there. We are not sure. They have not given that. Sales prices at the split off point after further processing. Okay, guys, one thing you can understand, only for product A, we can sell it at split off point. Whereas product B and C, you can sell only after further processing. Clear? That you have to takanta get it. Okay, sir, did they tell it in the sentence whether they tell it or not later? I don't know. We will read it. But by just seeing the table, you should understand. When selling price at split off point for B and C is not given means maybe they don't have ready market there. They don't have the ready market. That means B and C, you have to sell it only after further processing. Okay. After further processing, they have given 150, 175 and 50. Cost to process after split off 150, 150, 150. Guys, for only A, I have a choice. I can either sell it at split off point or after further processing. Assume that product C is treated as a byproduct and the company accounts for the byproduct at net realizable value as a reduction of joint cost. Assume also that product B and C must be processed further before they can be sold. Okay. Find out the total cost of product A in September if joint cost allocation is based on net realizable value. Find out the total cost of product A only they have asked. Only product A, guys. Okay. Please be careful. Guys, listen, yeah. Let me read that last paragraph once again because few things are given there only. Assume that product 3 C is byproduct. So this is byproduct for us. Okay. And the company accounts for the byproduct at net realizable value. First, our job is was to calculate net realizable value of what? Byproduct. How much is that, guys? Come on. Units sold into 50. Units sold into 50. 7,500 into 50. 3 lakh. 3 lakh 75. Minus further processing cost. 1 lakh 50. 2 lakh. What is this? Net realizable value. Okay. Adeno. It is a share of joint cost to the byproduct. What is the total joint cost like? 8 lakh 40. 8 lakh 40 minus 225. 225. 6 lakh 15. Now this has to be shared by between whom? A and B. For that again we have to follow what? Net realizable value method. Net realizable value method. How is it, sir? Simple. Simple. Calculate the sale value minus further processing cost. Okay. Sure. Come to the question number 4. Now solution for fourth one. Yes. Product A can be sold at the split off point because the question says that product B and C must be processed. They are given in the last paragraph. Yes. Further, before they can be sold. Since product A is not included in that, we know that product A can be sold at the split off point. That's clearly they have already decided. Now no confusion. They have already decided product A will be sold when split off point. Okay, sir. Furthermore, the cost to process product A after the split off point is 1,50,000. Whereas the additional revenue to be earned by processing it further is only 75,000. 50 increase in selling price per unit multiplied by 1,500 units produced during the September. Correct? Yes. So let me show that. Product A. Yeah. For product A, guys, if I sell it at after further processing, how much will I get? 2,000 into 150. Okay, or else do one thing additional. Okay, what is the difference between the split off point and after further processing? 50 additional, correct? Into 2,000. Into 2,000, guys. Sorry, 1. The additional or incremental revenue which I will get from product A if I further process and sell. But for that, what is the additional cost? 1,50,000. 1,50,000. So if by chance if they ask my suggestion, what will I tell? No, don't go for it because it will further reduce your income by 50,000. So it is better to sell at what? Split off point. It is better to sell it at split off point. Correct? Now are we supposed to give suggestion? No, they have already decided. Did they ask for us? No, they already decided. Guys, come on. In this question, interesting. Listen now. Sir, they have already made decision. They clearly told B and C has to be further processed. B and C has to be further processed. That means they already decided A to be sold at split off point. Yes. And I also explained the reason for it. Yes, sir. Now, to calculate the net realizable value of A, should we take 100 or 150? 100. Key thing. Guys, listen here. I had told I will stick to my words. If net realizable value of joint products has to be calculated, we should always take sale value after further processing. Clear? In that situation, we would have not yet decided what to do. Maybe they will only ask our suggestion. At the end, we will tell this is what you have to do. Either sell at split off point or by further processing. So in that case, before the decision, if I am calculating net realizable value, I will calculate sale value at what? After further processing. And in this scenario, company has already decided I will sell A at split off point. Now, should we consider what is the sale value after split off point? No, decision is already made. They are not even asking us. So that means to calculate net realizable value, we have to take the sale value at split off point. Only for this question. Please be careful. I am explaining the reason also. Already decision is made. Whereas in other questions and all, we used to first calculate net realizable value. Using that, we used to apportion the joint cost. Later, they used to ask in sub question 2 or 3, what should be our decision? What will you advise? Should we sell at split off point or should we sell it after further processing? In those situations, we used to always take the sale value after further processing if it is available. But now we have to take what? Sale value of split off point for product A. Product A, guys. Question to question, sometimes things will change. So, and you should know the reason because in the exam, whatever you it come in the question, as per the data given, you have to adjust your answers, guys. Okay, sure. Okay, let me read it from you. It will be repetition, but it's okay because there is a continuation. That's why. Since product A is not included in that, we know that product A can be sold at the split off point. Furthermore, the reason for it. Why are we selling it at split off point? The cost to process product A after the split off is 1,50,000. Whereas the additional revenue to be earned by processing it further is only 75,000. How did we get it, sir? 50 increase in selling price per unit multiplied by 1500 units produced. Okay, they are calculated only with units produced, not with the units sold. But anyway, decision will be same. Clear. Units sold is different. We did with units sold. That's why I guess we got 1 lakh. Clear. Incremental revenue. But here they have taken only with units produced. Guys. Anyway, decisions will remain same. Decision will remain same during September. Therefore, product A will not be processed further, and we use the sale value at split off point. Sale value of split off point for A for allocating what? Joint cost price. The sale value at the split off point is A in A, that is 100 rupees into 1500 units or 1 lakh 50. They consider units produced here. Oh, let us see. Because units sold is also given guys separately. Since product B must be processed further, we use this net realizable value for the joint cost allocation. The net realizable value of product B is how much guys? 175 into 3000 units, 375 minus 1, sorry, how much you will get? 1 lakh, 175 into 3000? 5 lakh 25,000 minus 1 lakh 50,000 further processing cost. What is the net realizable value of product B? 375. What is the net realizable value of product A? 1,50,000. We will use this as a ratio to what? Apportion joint cost. Product C, the byproduct must also be processed further to be sold. The net realizable value of product C is how much? 75,000. 50 sale price after further processing into 4,500 units produced minus 1,50,000 in further processing cost. Guys, please be careful. To calculate net realizable value, they are considered everywhere units produced, not units sold. Sir, is there a logic behind it? Yes. Why? Joint cost would have been incurred for the units produced, not for the units sold. Correct? Yes. So there can be a opening stock here. Obviously, because what I can observe is units sold is more than units produced. Correct. But process has taken place in the current period. Yes. So joint cost would have been incurred for units produced. Logic again. Correct. So units produced they have taken. Even though it is the selling price, they are multiplied only with units produced. The reason being, guys, reason being is simple. Sir, the joint cost, whatever we have to apportion, is incurred during when? September. Come on, incurred during September. So units produced is taken during September, guys. Units produced during September is taken. Why so? Because obviously, whatever joint cost we have incurred is for the units produced during September, guys. We have to split it over them. Okay. Fine. So what is the ratio we have got, guys? 1,50,000. 150 is to products is 75. Yeah. Yes. 370. So this is 375 and is to 75. 375 is to 75. Joint production cost total 8,40,000. Since the byproduct C is accounted for as reduction as to the joint cost, the joint cost to be allocated are 7,65,000. Sir, who is it? What is the sale value of byproduct? 70. Okay. This is byproduct. Oh, one second. First, we should go with byproduct. Okay, byproduct 75. Yes. Joint production cost total 8,40,000, guys. Since byproduct is the accounted for a reduction, how much will go for byproduct? 75,000. So 8,40,000 minus 75 will be how much? 7,65,000. Now this you have to split it between A and B. A and B. To be allocated between product A, sale value is 150 and product B, net realizable value is 375. So now split 765 in the ratio of 1,50,000 and 3,75,000. So the total on which the allocation of joint cost is based is how much? 150 plus 375. That is the base. 5,25,000. Product A represents, okay, percentage and all they have calculated. Simply for product A, how much will go, sir? 7,65,000 into 1,50,000, yeah. 1,50,000 divided by 5 lakh 25. Huh? 2,18,568. Okay. Why? 571. Okay. Maybe that 3 rupees difference because they have calculated the percentage. Okay. Guys, listen here. They have calculated the percentage. Sir, what is that percentage, sir? 1,50,000 is the net realizable value of product A na, divided by total lakhs. It is coming to around 28.571 and they have rounded up there. Okay, now apply it on 7 lakh 65. How much you are getting? 2 lakh 18,568. 2 lakh 18,568. Guys, they have done it theoretically, but I don't suggest, don't write so much stories. Okay, especially numerically, present it in a table. Present it in a table, and this will be more complicated. You see, when you're reading so much number, that this and all, theoretically it will be confusing. They are a simple thing. What is the joint cost to be apportioned to product A? Correct? Okay. First, what you have to do before going to A, first you apportion it to byproduct. So, joint cost to byproduct, guys. Come on, let me just show it. Yeah. Joint cost to byproduct. How much, guys? 75,000. 75,000. What is the remaining joint cost? Remaining joint cost 8 lakh 40 minus 75. How much is that? 7 lakh 765. 7 lakh 65. Now joint cost to A. How much, sir? 7 lakh 65,000 into what is the net realizable value of A? 1 lakh 50,000 divided by 5 lakh 25. Sir, how did you get 5 lakh 25? Net realizable value of A plus B. 2 lakh 18,571 you will. Remaining you can put it to B. Illa sir, I want to calculate that cost. They have actually not asked, but I am just showing. 7 lakh 65 into how much for B? 375. 375 whole divided by 525. 5 lakh 46 429. Hope you understood. First, the story and all you explain. Okay, for A, why did you take net realizable value only at split off point? What is the reason? Already decided. It's already decided. That story and all you explain first to two paragraphs, maybe. After that calculation and all, better present like this. Better present like this. Instead of in paragraphs. Yeah, shall we? And guys, for this question, they have asked only A. You will write only A. I have just done only for you guys. B also. Extra. ಜಾಸ್ತಿ ಕೊಟ್ಟ ಅಭ್ಯಾಸ marks presentation marks is not in my hands. Fine, we'll proceed further, guys. Question number 5, guys. RST Limited produces 3 joint products XYZ. The products are processed further. Pre-separation costs are apportioned on the basis of weight of pre-separation means what? Joint cost of weight of output. Weight of output, guys. So which method they are asking you to follow? Physical unit method of each joint product. The following data are provided for a particular one. Cost incurred up to the separation point 10,000, which is nothing but joint cost. Then product XYZ output in liter 100 70 80. Take this only as ratio to apportion joint cost. What is the ratio? 10 is to 7 is to 8. Okay. Cost incurred after separation point, further processing cost, guys. FPC. 2000, 1200 and 800. Selling price per liter after further processing at pre-separation point. Guys, for all 3 products, market are available. When, sir? Both at split off point as well as at after further processing. After further processing. Okay, sir. You are required to prepare a statement showing profit or loss made by each product after further processing using the presently adopted method of apportionment of pre-separation cost. Advise the management whether on purely financial consideration, the three products have to be processed further or not. Means you have to give a guidance now for them. Should it be sold at split off point or after further processing? Okay, similar question we would have done in the class, guys. Yeah, they're asking only suggestion here. Whereas in one question we did in the class, actually, that is the out of this questions only. Okay. Where we also told, as per our suggestion, what is the profit or loss? Is there an increase or decrease? Obviously, our suggestion means it will be increase only. No chances of decrease. Yes. Question number 5. Solution for it. Statement showing profit or loss by each product after further processing. Okay. First, do the apportionment, which they have done it as a working note. Output 170, 80. So they have found out weight and all not required. Straight away go with apportionment. What is it, sir? Take the ratio. What is the ratio? Let me write it here. You can write as it is also, no problem. 100 is to 70 is to 80. Illa sir, I will simplify 100. 10 is to 7 is to 8. Okay, 10 is to 7 is to 8. So total comes to 25. 25. Okay, sir. Now how much to product X, guys? 10,000 is the total joint cost. Total joint cost is 10,000 into 10 by 25. 4,000 divided by 10 into 7. 2,800 per product Y divided by 7 into 8. 3,200. Sir, should I show the calculation for each of them? No, better write simply ratio here. 10 is to 7 is to 8. And even this weight, I don't suggest us. Okay, they have done first weight. How is it, sir? In FM and all, you will have something called as weighted average cost of capital. Like that they have done. How is it, sir? So, for example, 100 divided by 250, 70 divided by 250, 80 divided by 250. Then they have multiplied this weight with the joint cost. Okay, one step extra. If you have time, you can do it. But I know you will not have so much time. Sure. Oh, first, now coming to above. Sale value after further processing, guys. After further processing. After further processing. Straight away take it. Minus further processing cost. Minus joint cost, which is apportioned below. Okay, whatever we have done here. So you are getting profit or loss. Product X 1000 rupees loss, on product Y 1600 profit, and product Z 800 rupees profit, guys. Okay, so now coming to decision whether to process further or not. Incremental revenue calculation we are doing. Guys, if I further process and sell 50 rupees, if I sell it as split of point 25 into 100, 2500 is the incremental. Same way here. What is the incremental sale value? 10 rupees into 70. Then here, what is the incremental? Sir, it is 15 rupees. 15 into 80. So we got incremental sales. Incremental sales. Further processing cost you deduct. Further processing cost you deduct. See whether you are getting incremental revenue or loss. Incremental profit for X 500, for Y it is 500 negative, and product Z it is 400. Guys, you will do what? Now, if you ask my suggestion, for further processing, we will go with X and Z, whereas Y we will sell only at split off point. Why? If I further process and sell, my profit will come down by 500 rupees. It will come down by 500 rupees. So simple suggestion of us. What is it? Sell X and Z after further processing and Y at split off point. Okay. They have also done. Okay, if you sell at split off point, at the split off point, what is the, this is not required, maybe alternatively they have done split off point. If you sell at split off point, then sale value 2500, 4900, 3600. Yes, the actual sale value, not incremental. From that, they have reduced what tax? Pre-separation expenses, which is nothing but whatever we have done here. Okay, not further processing cost, joint cost. Please be careful. This working is when we sell it at split off point. Okay, what are we getting as profit? Last year, the remaining two is profit. Now, instead of doing incremental, can we do like this? Yes, but it will be time taking. Now, can we compare and decide? Guys, listen. Sir, if I sell product X after further processing, what is my loss, sir? 1000. If I sell it at split off point, what is my loss, sir? 1500. Which is better? Sell after further processing because less loss. Less loss. So what is that, sir? Plus 500. Correct? Huh? Yes. Next, sir, if I sell product Y at after further processing, what is the profit, sir? 1600. If I sell it at split off point, it is, sir, 2100. How much more, sir? 500 more. So where should I sell? Split off point. At the split off point, because if I further process and sell, my profit will come down by 500. This is not loss. Profit will come down by 500. How is it, sir? Simple, guys. 1600 here, 2100 here. What is the difference? 500. 500. Hope you guys got it. Same way. Sir, product Z, sir. If I further process and sell, the profit is 800, sir. If I sell it at split off point, it is only 400, sir. So if I further process and sell, what is the addition, sir? 400 rupees. 400 rupees, sir. Is that clear? See, either way you do in the exam, not both way. Here it is done both the ways. I am just explaining you. Clear? So do you suggest this part, sir? No. When you go with incremental, just last part is not required. Last part is like they have calculated what's the profit or loss at split off point separately, after further processing separately. Then they have identified whether there is an increase or decrease. Is that if they ask it in the question, please do it. They are not asked. They have just asked your suggestion. Then better treatment is what? To go with incremental. To go with incremental. What is the conclusion? It is advisable to further process only product Z, X and Z, and to sell product Y at the point of operation. Oh, one last question. Question number 6. QPR Limited purchases crude vegetable oil. It does refining of the same. The refining process results in 4 products at split off point. S, P, N, and A. Product A is fully processed at split off point. Product SPN can be individually further refined to SK, PM, and NL. Okay. So product A can only be sold at split off point. Whereas other 3, we have to process it. The joint cost of purchasing the crude vegetable oil and processing it were 40,000 joint costs. Joint cost system. Yes, which is apportioned on the basis of sale value at split off point. Other details are as follows. Means, guys, A can be sold only at split off point, whereas SPN we have choice. Either sell at split off point or after further processing. Now, to apportion the joint cost, they are using what? Sale value at split off point, guys. So they are using this part. They are using this part, guys. So they have given further processing cost, sale at split off point, and sales after further processing. You are required to identify the products which can be further processed for maximizing the profits and make suitable suggestions. Guys, here itself we can tell. Come on, come on. Okay. Now, what is the additional sales we will get here? 1 lakh. For that, what is the additional cost we will incur? 80,000. So, what do I suggest? Further process. Further process, because it will get 20,000 extra profit. Next, 40,000 minus 12. What is the additional sales? 28,000. For that, how much extra cost? 32,000. Last 4,000. Profit will come down by 4,000. What do you suggest? Sell it at split off point. Next, 48, 36. What is the additional sales? 48, 36. So it is 8 plus 4, 12 lakh. Sorry, that is further processing. Just sorry. I took further processing. So 28, 48, 20 lakhs, sir. For that, what is the additional cost? 36 lakhs. So there is a dip in profit. There would be a dip in profit. So what do you suggest? At split off point. And product A, anyway, we don't have a choice. We have to sell it at split off point. So what is the answer, guys? Sell yes after further processing, whereas P and A at split off point. If this kind of questions are asked in MCQ, you can't answer. Aram say you can answer. Now, by seeing the length of the question, students will think, oh, this question we cannot solve. Let us keep it at the end. It happens sometimes because just by seeing the length of the question, we will decide, oh, it is the first question. Paka. Yeah. So let me see later. Fine, guys. So let us see the working. Statement of comparison of profits before and after further processing. Sales at split off point. And guys, if it is a descriptive, you have to present. You cannot simply give 2 lines telling, produce this, sell this at split off point, sell that at after further processing. Thank you, Anta. They will also tell, thank you, come again. Come again, Andre, manegalla. Chalo, hope you understood. Sales at split off point 20,000, 12,000, 28, 20. Total is 80. Apportioned joint cost for which they have done the working note. Okay. Apportionment of joint cost on the basis of sale value at split off point. Total joint cost is 40,000. Sale value is how much? 20, 12, 28, 20. Total comes to 80. Okay, you can simplify it. They have taken as it is. So for yes, how much is that guys? 40,000 divided by 80 into 20. For P and all it continues. This ratio calculation and all you can take care. You can cross check for 1 or 2. For A how much? Last one I will tell. 40,000 divided by 80 into what is the sale value? 20. 10,000. So joint cost apportioned is 10, 6, 14, 10. Okay, so let us bring it here. Let us bring it here. And when we are selling it at split off point, we don't have further processing cost, only joint cost. Now, what is the profit if I sell at split off point? 10,000, 6,000, 14,000, 10,000, total is 40. Okay, 1 point we are done here. Second part, sale after further processing. Further processing cost is reduced. Okay, both of this has to be reduced, guys. Apportioned, here also reduction. Okay, apportioned joint cost, same to same. But please be careful. For A, we don't have this choice at all. Why, sir? I have to sell it at split off point. So they are ignoring it. Okay, so what is the profit we will get? 32 and here loss 2000. Loss 2000. So incremental you calculate. 30 minus 10. Sorry, 30 minus 10 this 10, not the previous. Yeah. 30 minus 10, 20. 2 minus 6, minus 4. Minus 2, 14. It is minus 16. Minus less so. Minus 2 minus 14 is how much? 16. So, will we go for this too, sir? No. So, only yes, we will do the further processing. Clear? Yes. Sir, should we present like this in the question or can we straight away go with incremental, sir? You can go with incremental, but observe the marks weightage guys once. Okay, if marks weightage is around, assume 3 to 4 marks, better go with incremental. No, sir, they ask same question maybe for 6 or 7 marks, better present individual, like how they have done here. Clear? Yes. Suggestion. Suggested product to be further processed for maximizing the profit. On comparing the figures of profit if no further processing and the profits if further processing, one observes that OPR Limited is earning more after further processing of only product S, which is 20,000. Hence, for maximizing the profits, only product S should be further processed and product P, N as well as A should be sold at split off point. Clear? And guys, please be careful. Even if it is a loss, we should see after further processing, will my loss increase or decrease? If it decrease, good. If it increase, not good. Clear? Because sometimes both the places loss only, sir. What will I do? Still you have to make the decision. Will my loss increase or will my loss decrease? Okay. Sure. We are done with this. So one case scenario question is there. Let us move to that. Case scenario. Pokemon. Oh, you know all this? Pokemon Chocolates manufacture and distributes chocolate products. It purchases cocoa beans and processes them, that is the raw material to manufacture chocolate, and processes them into two intermediate products. Intermediate means maybe not the complete output. Not the complete output, guys. That is at split off point, they are intermediate. If I further process and sell, I can call it as finished. Chocolate powder liquor base, milk chocolate liquor base. So can I call them as joint products, sir? JP? Yes. These two intermediate products become separately identifiable at single split off point. Every 500 pounds of cocoa beans yields 20 gallons of chocolate powder liquor base and 30 gallons of milk chocolate liquor base. Okay, 500 pounds will give you 20 yields of uh, 20 gallons of chocolate powder liquor base and 30 gallons of milk chocolate liquor base. So totally if I add up both 50. The chocolate powder liquor base is further processed into chocolate powder. Okay. Chocolate. Okay, let me write like this better. Just a minute. Oh, sir, at the end of the joint process, this is what are we using? Cocoa beans. Cocoa beans. What is the cost of it? Okay, we will see that later. So 500 we are using cocoa beans. Now this will give us chocolate powder liquor base and the other one is milk chocolate liquor base. Can I further process? Yes, sir. I can further process it. So what I will get? Chocolate powder here and milk chocolate. Milk chocolate. Oh, let me read it. Here I will get how much? Let me write that also. 20 and 30. 20 and 30. Okay, this paragraph. The chocolate powder liquor base is further processed into chocolate powder. Every 20 gallons of chocolate powder liquor base yields 200 pounds of chocolate powder. The milk chocolate liquor base is further processed into milk chocolate. Every 30 gallons of milk chocolate liquor base yields 340 pounds of milk chocolate. Okay, so production and sales data for the October are as follows. Cocoa beans processed 7,500 pounds, guys. So total is 7,500. Then whatever 500 they gave WhatsApp, that is standard. 500 if you put, you will get 20 and 30. And obviously now we have to calculate. If I put 7,500, how much will I get, guys? Okay. Cost of processing cocoa beans to split off point 7,12,500. So what is the cost incurred for joint process, guys? Joint cost of 7,12,500. Okay. Chocolate powder 3,000 pounds. Sales 3,000 pounds. Selling price 190 per pound. Milk chocolate 5,100. Sales of the same. Selling price is 237.5 per pound. The October 2023 separable cost, that is further processing cost, of processing chocolate powder liquor into chocolate powder 3,02,812.5. So 3,02,812.5. Okay. The October 2023 separable cost of processing milk chocolate liquor base into milk chocolate are 6,23,000. Fine. Further processing cost. This is FPC. Okay, sir. Done. Pokemon full processes both of its intermediate products into chocolate powder or milk chocolate. There is an active market for this intermediate products. Okay. Sir, can I sell this intermediate products itself? Yes, they're telling we can sell that also. Active market is there. In October 2023, Pokemon could have sold the chocolate powder liquor base for 997.5 a gallon. That is per gallon. And milk chocolate liquor base for 1235 a gallon. Guys, please be careful. Intermediate products are expressed in gallon, whereas the output finished products are expressed in pounds. You are required to show how the joint cost of 7,12,500 would be allocated between chocolate powder and milk chocolate liquor bases. Chocolate powder or milk chocolate liquor base. Okay, two different names they are used. One is intermediate, one is output. Fine. Sure. But still, we will see whatever is the MCQ requirements. How much joint cost is allocated between chocolate powder and milk chocolate liquor base, respectively, using sale value at split off point. Actually, it should be, question is somewhere wrong. It should be chocolate powder, intermediate product, because this is only we can sell it at the split off point. At split off point. That liquor base is missing. Maybe they would have used together. Okay, common name alva. So what they would have felt is, sir, chocolate powder and milk chocolate, liquor base is common for both. Liquor base is common for both. Okay. Why I felt here to explain this is because chocolate powder also is there later, which is the ultimate output. So student get confused with that. Yes. Using sales value at split off point. Guys, what is the sale value at split off point? They have given it here now. 997 and 1235. We need to find out. Sure, we'll see. Yes, this is important. Guys, please be careful. Okay. Sale value of the products at split off point. Sir, how did we get it? 3000 LD. First, let me explain. Okay. Here in the question, we will go back. They are given us for 500 now. Just a minute. Just a minute. Yes. Sure. Guys, come back to this story. Sir, now, how much chocolate powder we will get? Sir, from chocolate powder liquor base is further processed into chocolate powder. Every 20 gallons of chocolate powder liquor base will yield 200 pounds of chocolate powder. 200 pounds of chocolate powder. So how much total we would have got? How much total we would have got? Guys, chocolate powder, have they given the output? Yes. So 3000 divided by 200 into 20. Total gallons we are calculating. Hope you guys are getting it. I repeat. 20 gallons will give you 200 pounds of chocolate powder. Do we know what is the total output of chocolate powder? Yes. So 3000 pounds divided by 200 pounds into 20 gallons. Now we will get to know what? Total gallons of intermediate product. Same way for milk chocolate guys. Milk chocolate will give us what? 30 gallons of milk chocolate liquor base will give us 340 pounds of milk chocolate. So what is the total output of milk chocolate? 5100. If you divide it by 340 into 30, you will get what is the total gallons of intermediate product. Clear? Yes, that is the key calculation. Hope you are understanding. Okay, 3000 divided by 200. What are those? Both are in pounds into 20 gallons. Guys, hope you are understanding. Simple. In that paragraph they told, this is the intermediate product. Actually, na? So 20 gallons will give us what? 200 pounds of chocolate powder. Now we have totally produced how much chocolate powder? 3000. If I divide each other, will I get how much total gallons? Into 20 into 20. So what are we getting here? Sir, the output of the intermediate product. Output of intermediate product. And what is the selling price of it? 997.50. Same way guys, same way here. Sir, with 30 gallons, we can produce 340 pounds of milk chocolate. Milk chocolate. Now what is the total milk chocolate output? 5100 divided by 340 into 30. You will get the total output of what? Milk chocolate liquor base. Milk chocolate liquor base. What is the selling price per gallon? 1235. So you will get the sale value of the intermediate products as. Hope you understood. Use this as a ratio. Use this as a ratio. Again, they have calculated the weight, not required. Total comes to how much, sir? 8,55. So how much has to be going to first chocolate powder liquor base, guys? Come on. Total joint cost is 7,12,500 into 2,99,250 divided by 8,55,000 divided by 8,55,000. 3,49,375. Same way, coming to milk chocolate liquor base. How is it, guys? 7,12,500 into 5,55,750 divided by 8,55,000 divided by 8,55,000. So if I do directly, I can eliminate this weight here. Clear up? Yes. Then I guess they've asked physical. Okay, what is the answer here? It would be 249,375 and 4,63,125. Let me see. Which one? Option D. D. Yes. 249,375, 463, 125. Next, how much joint cost is allocated between the chocolate powder and milk chocolate liquor bases respectively using physical measurements? Okay, gallons. We already found out. First working only we did it. Okay. There we took sale value, but now we will take only quantity. Yes. Yes. Output 300 gallon and 450 gallons, take that as a ratio. Sir, how did you get it? Guys, here we are just taking the quantity. Okay, same to same calculation. Illi tanka matra we are taking. We are taking only till there, only quantities. Yes, so how much we are getting it? 300 and 450. Straight away take that, guys. Weight not required is what I suggest. Clear? Yes. How is it, sir? 7,12,500 into 300 divided by 750. That is for chocolate powder liquor base. Or 2,85,000. Same way for it is next one milk chocolate liquor base. It is 7,12,500 into 450 divided by 750. 4,27,500. Okay. 4,27,500. Yes, option D. Next, third one. How much joint cost is allocated between chocolate powder and milk chocolate liquor base, respectively using estimated net realizable value (NRV). So for calculating NRV, we should take the sale value after further processing. Okay, and reduce further processing cost. Yes, sale value, final sale value of production. Guys, we are selling now what? The final products. What are those? Chocolate powder and milk chocolate. So what is the output? 3,000 and 5,100. Have they given the selling value? Yes, multiply. From that reduce separation cost. That is further processing cost. What do you get now? Net realizable value. Use that as a ratio. Use that as a ratio. Sir, what will be the amount? Simple. 7,12,500 into 2,67,187.5, which is net realizable value of chocolate powder liquor base, divided by 8,55. 8,55. Are you getting 2,22,656? Better you round up. As it is a rupees, you can just keep it 56. Coming to the other side, 7,12,500 into 5,87,812.5 whole divided by 8,55,000. 4,89,844 you can know. Huh? Option, okay, fine. So option is also in decimal means if it is a descriptive, you will round it off, guys. If it is a rupees, if they are given exactly, then better go with that. Okay, even if by chance if you round off, you go for whichever is the nearest. Whichever is the nearest. Oh, fine. Because especially guys, when it is decimal calculation and all, you may not get the exact figure. But whatever you have got, if it is a MCQ especially, go for whichever is the nearest one for it. Clear? Yes. So 222 and 489 guys. Sure. Which is the answer for this now? Option A, sir. Option A. What is the constant gross margin percentage NRV? Gross margin means what, guys? Gross profit. Gross margin is nothing but gross profit. Okay, sir. Final sale value of total production 17,81,250. How did you get it, sir? Already above you have done. Okay. Minus joint and separation cost. Separation cost we have got 926,250. Joint cost 7,12,500. Correct? Hello. Total cost you reduce. How much you are getting gross profit? 1,42,500. Clear? Guys, both put together consider it as cost of goods sold. Cost of goods sold. Okay, sir. So 1,42,500 divided by total sale value. Where is it given? 1781,250 into 100. 8%. And why did they use the word NRV? Guys, we have to take the sale value after further processing here, not at split off point. Please be careful. That is the ultimate output, chocolate powder and milk chocolate. Clear? Yes. Sure. Then, so this is the 8%. One more last question is there. Let me read it out and mark this. 8% is done. Last question. How much joint cost is allocated between the chocolate powder and milk chocolate liquor base, respectively, using constant gross margin percentage in RV? 8%. Okay. 8%. Guys, you remember we had done some reverse calculation? One question we are done reverse calculation. That's all we have to do here. Final sale value after further processing. After further processing, copy paste this. Okay, now yes. Next, gross margin 8%. If you deduct gross profit from sale, what do you get? Cost of goods sold. Correct? Or cost of sales? Yes. Then reduce separable cost. That is post separation expenses. At the end, whatever you get straight away is what? Joint cost apportioned, guys. Joint cost apportioned. Hope you're understanding. It has to match. If not, somewhere you would have gone wrong. Is that clear? Yes, similar question we have done in the class. Yeah, more, in fact, more items were there. Fixed selling expenses and all were there. Clear? Yes. Sure. So the answer here is 221,587 and 4,90,912.5. So the answer is C. Yeah, yes, guys. We are done with discussing the questions on joint and by products.